Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant, with me, my colleagues Nigel and Reema. Guys, hi.
Hi, good morning.
And it's looking like it's going to be a little soft and sideways kind of open.
We thought that yesterday as well, right?
We got a soft open. Not a soft open, we got a flat open. And then the
open.
market just kind of picked up
Took
and
off.
rallied on. Let's see. Overnight, the Qs are negative once again. The S&P, the Nasdaq, both are lower. Nasdaq more by about 1.5%. The S&P is down about 1% or just under 1%. By the way, the S&P 500 is in bear market territory. I mean, defined as that classic 20% decline from the top once again. That level, that marker is 38.55. We closed it at about 38.17 or so. As I said, techs, of course, seeing a bit more pressure. The story is not different. The story is the same. What is top of mind for markets is basically recession fears and how bad it's going to be, whether it's going to be a short, shallow one or maybe a longer, prolonged one. And I think there is no new information, perhaps except the fact that we got, home builder sentiment index out of the US, which, barring the COVID period, I mean, you've got to exclude that, it's the lowest in December that we've seen in the last 10 years or so. So that kind of tells you, it only underscores the point that sentiment is kind of turning for the worse, which is exactly what the central bank wants. But the only problem is that they still want a hike all the way to 5%, maybe beyond 5%, as per their last commentary. The market here, as we were just saying, staged a strong comeback, and the Nifty ending about 0.8% higher, back above 18,400 or so. There was no dip, but there were intraday falls, but all of them mostly got bought into. On the way up now, there are multiple resistance levels between 18,435 and 18,525. The 20-day moving average, by the way, also coincides in that band. The 20-day as of yesterday's close stands at 18,542 or so. That's a short-term sentiment reversal kind of level above which the market needs to get its head above. The day's low yesterday was 18,244. So, I mean, it's got not got great significance, but it'll be generally well and good if at some point the market kind of comes back. And it stays above that particular level. So that's 18,244. The Bank Nifty also bounced from the 20-day moving average, and it saw a positive close. So that's good. I mean, that's been the stronger of the two indices. It's gotten a little tricky recently. On the way up, there are... so what you can do is you can... to analyze what happens in the very near term, these are very near-term levels, you take the recent high and the recent low and draw a retracement. So there are two numbers, the 50% and the 61.8% retracement of the recent fall. That stands at 43,616, and then there is 43,742. Very near term, 300, 400 point kind of levels on the Bank Nifty. Those are your resistances. The 20-day for the Bank Nifty stands at 43,280 from where the market bounced. So that, in a way, kind of becomes a bit of a support level. So we'll see. The market here has been absolutely incredible all year, and I think yesterday was a demonstration once again. Asia was down, US was down, but the market here kind of singing to its own tune. Will that continue as we get closer and closer into the end of the year? That's the question. The SGX is down about 30 points or so. Guys, hi.
Hi, good morning. So the SGX suggesting that we will have a bit of a give back after that solid 150-point rally that we had on the Nifty. And just to underscore that point about India's outperformance, the US markets have been declining for the last 4 trading sessions. In the last 4 trading sessions, the S&P 500 has fallen by nearly 4%. In contrast, the Nifty is only down close to about 0.9%. So the streak of outperformance continues right till the end of 2023. That said, there is lack of liquidity and lack of triggers on the horizon. Yesterday, in terms of flows, the FI sold 540 crore in the cash market. The DIIs bought 687 crore. But we have seen a sharp drop-off in the gross purchases as well as selling. Just look at the gross purchases by the FIs over the last couple of days. A week back, we were averaging close to about 9,000, 8,000, going up to 10,000. The big number on December 16, that's last Friday, was also exaggerated on account of the FTSE rebalance. But other than that, on an average, we would have been closer to 9,000. But yesterday, that number dropped off to nearly 5,800. So basically, there is less liquidity. Liquidity is thinning out, and that generally will exaggerate the kind of volume price moves that we will see in our markets. One interesting trend that we are picking up is the fact that promoter stake sales have started picking up. So today you're going to see block deals from Sterling and Wilson, Dabur, Just Dial. Dabur promoters are looking to sell about 800 crore rupees. For Sterling and Wilson, if you include the maximum amount that they're willing to sell, about more than 5% stake, it amounts to 300 crore rupees. Just Dial's stake sale of 2% by the promoters is to comply with the minimum shareholding norms because they have a 77% stake. They need to bring it down to 75%. But look at Dabur, Sterling and Wilson. Prior to that, you had GMM Pfaudler, where the foreign promoter was looking to sell 300 crore. Aberdeen had indicated that they want to sell their 10% stake in HDFC, AMC. In the Sapphire Foods block deal as well, we have the promoters bringing their stake down. And even in the IPOs, which are currently open right now in the market, one of them is KFin Tech. That's a pure offer for sale of 1,500 crore rupees. And even the other one, Elen Electronics, we'll talk more about it. This is the new IPO, which opens today for subscription. In that, out of the 475 crore that the company is looking to raise by way of fundraise, 300 crore is going to be an offer for sale. So just one trend that off late you are seeing a lot of promoters, bringing down their stake or looking to exit.
Well, Rima, everyone's asking, what about Santa? Where's the Santa Claus rally? I guess
we got a glimpse of him, right, yesterday?
I guess the Nifty has been nice. So maybe Santa visits here first. Because the US markets are under some pressure. But the Indian markets, well, we're doing relatively better if you observe for the last few sessions. But getting to the market setup then, well, yesterday we went down to around that 18,250. We took support out there and we did bounce off those levels. The bulls, they didn't want to see the Nifty slide to around the 50 DMA road, and that's why from the lows we did see a good bounce. The heavyweights, they put their hand up yesterday, they got counted, ITC, HDFC, Reliance Industries. That's what offset the weakness that we saw in IT names. And the Nifty Bank went for a day of consolidation, but for me, yesterday's session was good because the number of stocks advancing were more than the number of stocks declining. Not to take away from the fact that the institutional participation has gone down. So the institutional first, I'm looking at the DI and the FI number together. The participation of both of them is down by 25 to around 30% in comparison to December averages itself. And yesterday, for whatever it's worth, you got a net institutional buy number of around 150 crores. The previous couple of sessions on low volumes, well, you had close to around 450 crores of net sell number. So you'll hope that since volumes are thinning out, at least you get a positive institutional number going ahead. Moving to the FNOQs then, you'll see you only got 150 crores of net institutional buy number. Well, there was a short covering bounce that played out. The Nifty went higher, the open interest was down by close to around 3.5%. And that perfectly ties in with what the FIs did in the FNO market. Because on index futures, they covered close to around 13,000 short contracts. Remember, they continue to remain net long on the index, and that was backed up with put writing. So in yesterday's trading session, they wrote close to around 87,000 put contracts, which was heartening to see. What were they writing? 18,300, 18,350, as well as 18,200 put. Between them, 85 lakh shares getting added. On the flip side, the call writers, well, they scrambled for cover yesterday. The 18,300 as well as 18,350 calls, well, there was unwinding of open interest, telling you that the call writers, well, they were getting out of the market. Now, we're not out of the woods. You'll get a fresh breakout only once you cross that 20 DMA. On the downside, the 50 DMA becomes a bit of a support zone. Though in the near term, if you're taking a long trade, then yesterday's low becomes crucial. That's around 18,250. Since the SGX is suggesting a 25-30 point downtick, my guess is that if you get maybe a 80-100 point downtick, then risk reward could favor the bulls. But otherwise, it appears we're in a bit of a range.
Bit of a range. That's the outlook coming in on the Indian indices. Let's get to the opinion that we've got from wise men this morning. Mahesh Nandurkar of Jefferies says 80% plus of the rate hikes by the US Fed are now in the bag. He says India policy rates are also 25 to 50 bips away from peak levels, and the impact of rising rates on market valuations seem to be priced in. He says, notwithstanding the recent COVID spike, China opening up theme has gathered momentum, which is good news for developed markets to emerging markets and the shift to developed market to emerging market shift and India flows. He says they deploy their recently raised cash in the model portfolio into metals. Additionally, they shift their weight from Bharti, Zomato and Maruti into L&T, Reliance and banks.
Well, let's get you some money market views as well. This is Bhaskar Panda of HDFC Bank, who says that the dollar index has been moving in a narrow range, and since no major events are there, the trend will remain. He says Brent crude oil prices have also been moving around $80 per barrel, which should help India. In Indian markets, he says, a lower dollar index and risk sentiment has ensured that the USD-INR pair closed lower yesterday. He expects that pair to trade in a range of between 82.5 to 82.7 to a dollar for the day.
On the bonds, Bhaskar Panda says all major central bank actions have been priced in and he expects range-bound movement in the yield. He expects the 10-year benchmark yield to trade in a range of 7.25 to 7.3% for the day.
Well, we have a lot of stocks specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Stolen Wilson, Renewable, Hinduja Global Solutions, Ramco Systems, IRB Infra, NBCC-TFM Foods. So they are stocks on the back of positive news flow. On the flip side, you have Dabur, Just Style, Indiglobe Aviation, and Gujarat Sidhi Cement. They could be stocks that are reacting to negative news flow.
Okay, we've got a very special guest now joining us. Dan Fineman is co-head of equity strategy, Asia Pacific at Credit Suisse. Dan, great to have you with us here on the program. Thanks very much for your time. You, Dan, at CS remain cautious, right, with regards to a U.S. recession. But there are those who say, and we'll come to what you think will the shape and size of the recession in the U.S. will be. But there are those who already argue that, a softish patch of growth in U.S. bodes well for emerging markets, and that's been historically true. Would you agree with that, Dan? What's your sense?
I would agree with that. I think if we have a very hard landing in the U.S. of a recession as deep as the Great Global Recession in 2008, 2009, that would be bad for Asia and emerging markets. But a slowdown of the magnitude that we're expecting for the U.S., actually, it could be pretty good for Asia. One factor is it could lead to a weaker dollar, and a weaker dollar typically is associated with good performance for emerging markets, Asia included.
Okay, so a sharp recession in the US is bad news for all emerging markets. A soft landing in the United States may spell good news for emerging markets like India. And then India's growth rate of 6-7% also starts looking very attractive, right? Dan, one question that a lot of investors are asking is, why should I take risks going into 2023? Because Federal Reserve still indicates that we have more rate hikes to go. They're going to stay at peak levels for longer. That uncertainty remains. And on the flip side, I'm getting some very good yield on my fixed income. And this is a question that all over the world investors are asking. Your thoughts on equity versus fixed income for 2023?
Well, I think that your point certainly applies for the U.S., where equities are really still quite expensive relative to fixed income, and where the impact of a recession in the U.S. would hit equities much harder than it would hit bond markets. In Asia, though, I think the story is a bit different. In Asia, the economic downturn isn't going to be as great. Equities aren't stretched. Some markets are looking expensive, but in aggregate, Asian equities look a lot cheaper than U.S. comparables. So I think in Asia, the equity versus fixed income argument is tilted in the direction of equities. In the U.S., it's a different story.
All right. Hi, Dan. Morning. I'm happy to hear, actually, that you have upgraded India from the underweight stance. If you could tell us what's the incremental money, where does it flow? China is very attractive valuation-wise, while India, well, we are going to be giving growth. So how do you weigh in on both these two? Incremental money getting into 2023 goes to which market?
Well, I think at the moment, it doesn't have to be an either-or choice. It could be a win-win for both markets. I think that India still has some important strengths relative to other markets in the current global environment. India has a very robust economic cycle. It's got a good structural outlook in an environment where developed markets are heading into a slowdown. India's good growth, I think, deserves to trade at something of a premium. China has a cyclical upturn coming out of a deep downturn. Its equities are very cheap. And I think that there are good arguments for both of them, at least for the next several months.
Okay. Got that. Dan, Yeah, so when you began by saying the U.S. slowdown, what you were expecting, the size of it. So you're expecting a soft patch, right? Nothing large or extended or very deep. Is that correct?
We expect a recession, but a mild recession, not on the scale of the 2008-2009 recession. The key difference is that right now the financial sector, the corporate sector, the household sector are much stronger than they were in 2008. Leverage is much lower. Deep recessions are typically associated with deleveraging events, and that's not the situation at present. What we have is a garden variety, fairly mild, short-lived recession lying ahead of us. This is still quite negative, I think, for equities in the U.S., but it's not going to derail better performance for emerging markets or Asia.
But would sort of a very mild recession bring the inflation problem under control to the Fed's liking? Isn't that, I mean, it's like a loop, right? So to get inflation to 2% or under, would just a soft patch of growth do, Dan, in your opinion?
It will definitely help the Fed's job, and I think, the Fed is clearly hoping for the economy to slow down. This is how you bring inflation down. It's no pain, no gain at the moment. The question, I think, for equity markets isn't whether a slower economy will help the Fed's job. It's how quickly will inflation
Okay, I think we lost.
Pivot to rate cuts.
So Dan, if we are in for a mild garden variety short-lived recession in the US, does it make sense for investors in India to look at export or global facing sectors like metals as well as technology? Because these are the sectors which have underperformed this year on fears of the global uncertainty, the macroeconomic uncertainty, etc. Do you think that will reverse in 2023 and it's time to look at global facing sectors out here in India, i.e. metals as well as information technology?
Not yet is the short answer. I think that we will have that opportunity, but it'll probably be closer to the middle of the year. I don't think that the U.S. economy or Europe will be bottoming out until late in the year. You'd want to position for that maybe 2 quarters in advance. So we're talking about sometime into the first half of the year before you would want to make that pivot.
Dan, you're suggesting that if you're going to get a mild recession, your preference will be to Asia versus the United States in terms of equity markets. What's the preference within Asia, though? You also mentioned that India and China both get equal share of money. Within Asia, what's the preference, and where would you lighten positions?
Well, we have been most enthusiastic the past year and a half about ASEAN markets, Indonesia, Thailand, Philippines. This remains our biggest overweight, but these are small markets. If you're talking about larger markets, China is still, I think, the best story. The valuations are still actually quite cheap. Even after this great rally they've had in November, the multiples are still at a deep discount relative to the rest of the region and relative to global equities. Our clients are still, I think, underweight China, but they are interested in playing into this cyclical recovery.
Just to stick with China, we are hearing of with the reopening, a wave of infections in China. And it's, of course, more amplified on social media, on Twitter, etc. But mainstream news outlets are also picking this up. I think yesterday the U.S. State Department put out I think when asked, the spokesperson said the outbreak is widespread and they hope it's contained. Any thoughts at all, Dan? Are you paying attention to it? Because if it gets too difficult to handle, this reopening may not be as smooth. What's your sense?
Well, first, from a human perspective, we're all hoping that the outbreak is mild as possible, and that as few people as possible die. From a market's perspective, I don't think that what we're seeing right now necessarily changes the equation. What markets and ourselves were hoping for, say, a month ago, was a slow, staggered, say, 3-month process of gradual reopening. What has happened instead is that they have lifted the zero COVID restrictions much quicker than we had anticipated, but it's not leading to a quick normalization of consumption behavior. And the bottom line is that 3 months from now, we're going to be where we were anticipating already, say, back a month before, which is that you're not going to see a normalization of consumption patterns until we get into, say, March. That's still the base case.
So talking about the base case, what are the kind of returns that we can expect from the Indian markets if the recession in the US is mild, emerging markets do better, in that China outperforms India? But in your base case assumption, the returns that Indian equity markets can see, and what happens if things go south? The downturn is far more severe. Then what's the downside scenario as you see it?
Well, I think that we can probably expect positive returns, not greatly positive returns for India, given where the valuations are right now. But you have good earnings growth. There isn't a strong argument for the market to be derating. So I think that we can hope for some moderately positive returns for India. The main risk, I think, would be global. If the recession in the US is deeper than we're anticipating, then that would be quite negative for global equities, emerging markets, India included.
All right, Dan, good speaking to you. Thanks so much for joining in and giving us your opinion. We're going to get into Christmas, so wishing you and your entire team a very Merry Christmas in advance, and we look forward to chatting up with you in 2023 as well. Well, for the time being, though, we'll slip into a short break. You come back, and as always, we'll focus on the top stocks that you need to track.
Welcome back. Despite the weak global cues, the Indian markets have remained resilient and firm. Yesterday, the Nifty was up 150 points. The sensex gained 470 points. This morning, the SGX Nifty is suggesting the start could be flat, but with a negative bias. Currently down 25 points on the SGX Nifty. But let's get to the stocks that you need to keep on your radar this Tuesday morning. The CNBC-TV18 list of top 10 stocks is lined up for the day. Well, all of us are in the studio now. Good morning, Vivek and Vahishta. Vivek, let me start with you. You're watching Dabur as well as Sterling and Wilson.
Well, good morning. Well, a couple of important updates as far as both Dabur as well as Sterling and Wilson is concerned. First, we'll have a look at what's expected in Dabur. Today, a large block deal is anticipated. Two promoter entities are expected to sell stake, a little less than 1% stake. This particular block deal would be worth almost 800 crore. And what we understand, we had a look at the term sheet. We understand that this particular deal will likely happen at a 4% discount to the last traded price. Offer price, base price would be a little over 565 rupees a share. After this, there's a lockup of almost 60 days for the further selling. Now, coming to Sterling and Wilson Renewable, in order to keep track and to keep in line with the SEBI's minimum public shareholding norms, two promoters are exiting part stake in the company, and this particular stake sale would be via the OFS route, or the offer for sale route. So the promoter group entity is looking, Khurshid Dalwala is looking to sell almost 1.58% stake, and Shapurji Palanji is looking to sell 3.69% stake. These are the base sizes. There is an option for an upsize of this particular OFS, mainly to keep in line with the OFS SEBI required norms. All
right, Vivek, we'll keep an eye out on both those names. Rima, with more stocks with news flow?
Yes, let me start with Just Dial, where the company has informed the exchanges that the promoter Reliance Retail Ventures will be selling 2% stake in the company to achieve the minimum public shareholding norms. This stake sale will happen via the open market. As of September, the promoters held 77% stake, so they want to sell 2% stake to bring it down to 75% to comply with the minimum shareholding norms. The stock, by the way, was up close to about 4.7%. The other one is Hinduja Global Solutions. Now, there the board has approved a 1,020 crore tender buyback. The price is at 1,700 rupees per share, so a significant premium to the 1,400 rupee where the stock closed yesterday. The cash in the books is pretty good, nearly 1,700 crore rupees. Remember, Hinduja Global Solutions got a lot of money after they had concluded the sale of their healthcare business. They've been making a lot of acquisitions, but now via the buyback, there is going to be a buyback with which some money gets returned to the shareholders as well. And finally, Ramco Systems, there is a board meeting which is scheduled 2 days later, 22nd on Thursday, where they will consider a fundraise.
Okay, all right, Rima, thanks for that. Well, Bahista, let's come across to you then. You're tracking a few more stocks today?
That's right. Well, let me start off with IRB Infra. When there's going to be a board meeting on the 4th of Jan to consider a stock split. The next is NBCC. Some positive news coming in. There's an order value of approximately 70 crores when the company has received a contract for the construction of a new multi-storied quarter complex from the Odisha Power Transmission Corporation. Interglobe Aviation. The DGCA has declared the summary for the domestic traffic in India for the month of November, and Indigo makes an on-time comeback to reclaim the top spot. Though there's a slight bit in fall in the market share, which is coming at 55.7%. Also, DGCA has said that 1.16 crore was the domestic traffic in November 2022, which is a growth of 2.3% on a month-on-month basis. The next stock is Gujarat Siddhi Cement, when the clean of the cement plant of the company, which is located in Gujarat, has been stopped for a period of about 10 days from today for the maintenance work. However, the cement grinding and dispatches will be continued. And the last stock is DFM Foods, wherein the reverse book building offer to delist DFM Foods by private equity firm Advent International has ended successfully yesterday, with 17.6% of the total equity tendered below the discovery price of 525 rupees per share.
Okay, all right. Thanks a lot for that, Vaista, Vivek, as well as Rima, for running us through all the top stocks that we're tracking for the day. Let's do a quick recap then of all those names that we just covered. Well, we're looking at Sterling & Wilson Renewable, Hinduja Global Solutions, Ramco Systems, IRB Infra, NBCC, and DFM Foods. Well, stocks with negative news flow include Dabur, Just Style, Interglobe Aviation, and Gujarat Siddhi Cement.
Let's turn our attention now to the commodity and currency market. Manisha Gupta joins in for a roundup of all the action. Manisha?
Well, thank you so much for that. There has been some profit taking across board when you look at the metal prices here. So whether it's aluminum, zinc, we've seen some declines. The only metal standing clearly has been copper. But apart from that, even if you look at iron ore prices, we are off 4-month highs. Steel is off its 3-month highs as well. Markets are reacting to the China new home sales in 2022. Until now, we've seen 30% decline on that. Similar case with precious metals, where gold and silver prices both traded on a negative note in the overnight markets there. Some gains, though, have continued for the crude oil prices, where we are seeing some support. After the overnight gain, a percentage point of gain is how the international markets are reacting today. But the major declines clearly continue in case of the gas prices. Natural gas prices for US have declined by 15% in the last 1 week. And the TTF, that is the European Union gas prices, have declined by 20% as well. You have the European Union countries finally putting a price cap on the gas prices, or gas imports rather, from 15th of Feb, and the market's clearly reacting to that.
All right, Manisha, thanks very much for that. We'll take a quick break. Deepan Mehta of Elixir Equities will be with us for some stock talk. Also, Amit Mahajan, Director Business Development at Paras Defence and Space Technologies, joins us in a bit to talk about their business. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, for starters, the US markets were a little bit under pressure. They're on a bit of a losing streak. And because of that, at least the start for us will be in the red with a cut of around 35 points odd. But a good time to discuss a lot of stocks. Well, Deepan Mehta, Director at Elixir Equities, joins us. Hi, Deepan. Good morning. Well, let's talk about Dabur first up. The promoter entity, they're looking to sell some stake. The stock could see a bit of a pullback in early morning trade. It'll be interesting to see what they want to use this money for. But what's your view on the stock?
Good morning, Ajil, and thanks for having me on your show. I think that's negative news for Dabur shareholders, considering that the stock has underperformed and even the kind of financial reports which have come have not been that enthusiastic. Volume growth has been tepid. And despite being present in so many categories, a few of which are not as mature as some of the other ones, the performance has been a bit subpar. And the overall new CEO strategy of focusing on power brands, although that is a correct strategy, but it's not really played out. So I'm not that optimistic or bullish on Dabur per se. And these corrections should not be used to get into an FMCG stock, including Dabur. I think the new consumption theme can be best played to a lot of other new generation companies or companies which are focused on spending habits which are changing, like say retail, entertainment, travel, hospitality, healthcare. I think those are the new so-called FMCG which one can play if you want to benefit from rising consumption spends.
Deepan, the market is playing this game called find where is the momentum today. It's a bunch of not completely new stocks. Sometimes it lasts for a day, 2 days. Yesterday it was in PSU insurers. This LIC, New India Assurance. There was GIC RE, 10%, 14% moves out of the blue. LIC was up a little less, 7% or so. Any thoughts in terms of whether this could continue?
Good morning, Prashant. A very good observation. I think somebody is sitting with a screener and just seeing which are the PSU stocks which are still listed, what is their price to earnings multiple, how much have they appreciated, and if they have not gone up enough and they are still cheap, then let's just buy them. I think that seems to be working in the market. And we are seeing a fabulous reversal to mean taking place as far as PSU stocks are concerned. They've been underperformer for decades, haven't created any real value for investors. And now that there is a tilt towards value stocks and value stock picking, we are seeing the PSU stocks come back into reckoning. Of course, government policies, government reforms, and overall market-friendly announcements have benefited PSU stocks per se. And people perceive that there is less interference now than ever before, by any government. So I think that's improving the sentiment in PSU stocks. And that's the beauty of our market, that something or the other is always doing well. And that gives an opportunity for investors as well as traders.
Do you look at Hinduja Global Solutions, Dipan? Would you recommend tendering in the buyback?
Sorry, Rima, I'm not tracking that stock. It's a very low profile company and somehow it hasn't come up in our radar, but I'll certainly look it up.
Where is it that you see the momentum now building? Have you picked up anything that people on the street are talking about?
See, Rima, I think we are typically entering a quiet period, and as such, no news comes towards the end of the year, and then when the first 1 or 2 weeks also are pretty quiet, and then we start getting into the earnings season. And our strategy has been to, when the earnings season is so close, it's better to just wait and watch, and then see how the earnings come out, and then make a more informed decision. In any case, there's a high degree of volatility, stock-specific volatility, when the numbers are announced. So I think it's best to take advantage of that situation and play a more informed, a more well-calculated, well-thought-out investment strategy post the numbers are announced. So I think it's perfectly fine from an investor-trader perspective to perhaps do no trades for the next maybe 2 or 3 weeks or so and enjoy this festive season, because next year is going to be a rocking one.
Okay, all right. Dipan, I request you to stay with us. For the time being, we need to focus on the defense sector. That's been in focus. The government also earlier this year approved a PLI scheme for drones and drone components with an allocation of around 120 crores. To discuss what's the potential opportunity and their focus on the drone segment, well, we're joined by Mr. Amit Mahajan, the Director, Business Development at Paras Defense. Hi, Amit. Morning. Thanks so much for joining in. Well, I recall we had a chat earlier and, y'all had mentioned that drones as of now, I don't think it contributes anything much in terms of revenues. But in the next couple of years, you were optimistic that things will improve. I think the guidance that you all have given is by 2025, 25 to 30% of your revenues could come in for drones. So tell us, how does the scaling up of this, take place? Do you all need to put in some fresh capex?
Firstly, thank you for having me on the show. Yes, the drone market in general in India, if you look at the EY and the FICCI report, the drone market is about to explode. And there are huge opportunities in this segment. And Paras Defense, in the last 2 years that we are into this particular domain, we've put in a lot of potential energy into this particular sector. This potential energy will start getting results from this year onwards with a minuscule revenue. But like I gave you a forecast, in the coming years, it will significantly contribute to our revenues. Why such a thing? Because I would like to mention that the Paras Aerospace, which is our drone subsidiary, is not working on a particular drone or a particular segment inside drone market, but we not only have one of the widest range of drone aircrafts, but we are also catering to the whole aspect of the ecosystem revolving around the drones. That is from the drone aircrafts to the drone payloads to drones as a service, and then subsequently also educating the new talent to become drone pilots. Now, if you remember, there was a article mentioning how there is a dearth of drone pilots. Now we are already catering to this problem. We are creating the whole ecosystem from A to Z when it comes to drones. And when you look at drone aircrafts alone, we are catering to defense, we are catering to industry, we are catering to agriculture. Now, everywhere there is a huge demand. Even if I take a small pie of it, it is very, very huge.
What is the pie you're looking at, but if you could tell us, Amit, clearly you'll have geared up for this opportunity, and that's good on you all. But the stock market would like to know a couple of numbers. So in FY24, I guess there'll be some kind of reflection of revenues. Is that correct? And
FY24 is going to be a good reflection, okay. And FY25 is going to be maybe in 3 digits as well.
So how much will it be? So FY25 is saying 3 digits, so more than 100 crores coming in from the drone segment itself.
Yeah.
All right, and FY24?
FY24, I want to be conservative. I don't want to put figures there.
Okay. You said that you will be providing drones to agri, defense, and the industrial space, right?
Yes.
Can you tell us some of the orders that you won in each of these 3 segments? Who are your clients? Have you been winning some certifications which allow you to compete and participate? Give us some updates on how each of these 3 segments in the drone category will develop from here.
So let me slightly bifurcate. When you cater to defense, you don't have to ideally certify your drones, but you rather have to go and do trials of your drones and prove the functionality of your drone. Now, this is also a public information that in the armed forces, our drones went for the trials and they got cleared. Our drones were the only drones which got cleared above 6,000 meters. And this is something which gives us enough boost and encouragement that we are in the right direction. Right. So this, when it comes to defense, a certain part of our drones have already cleared the trials and we are slated for a good amount of business in that area. The agri drone is almost on the verge of certification, and I'll be able to tell you this in the next few weeks. The industrial drones will follow in certification because these agricultural as well as the industrial, they are certified, they are regulated markets, and we are already there on the verge of getting certified. The moment we get certified, we are up for a good amount of business.
So till you get certified in agri and industrial, you will not be able to bid for orders, right?
It is, yes, you will not be able to bid, but we are amongst the very few companies who are getting certified for this.
And when are we expecting this certification? Or from...
We should be able to expect the certification in January.
Okay.
I'm hopeful.
For both of them, agri and industrial?
For agri, for sure.
Agri by January. Okay. And this point about defense, where you said that Paras Defense's drones have cleared the requirements that the Ministry of Defense have. What is the overall order pipeline from the Ministry of Defense? How many people are competing? What could your win ratio stand at?
Now, there are very few companies who are bidding for defense drones. There are some which are homegrown, which are very, very old and very good. And there are companies who are coming from abroad and participating. Right now, as we speak, there are more than 10,000 crores worth of live tenders when it comes to defense drones. And these are only what is there in the public domain. There are a lot of things which happen which I can't tell on public media. So all of this, if I say, if you distribute that within just 10 companies who are very, very good and can deliver, then it's a huge market.
10,000 crore to be distributed amongst 10 companies, right?
I'm just putting a ballpark.
Okay. Are you equipped, but at maximum levels, what kind of revenues can you do from this drone segment? We'll wait by for orders, but as of now, with your capacities and your technical expertise, what can you cater to?
The question that you asked me earlier, and maybe this one is linked, is what is the capex that is required for me to scale up in my drone business?
Yes.
Now, the best part is the drone segment, the whole team is a techno engineering team. They are into development, they are into creating newer technologies and focusing on indigenous development. They are fully backed up by Paras Defense's infrastructure, which is again very, very scalable. A lot of system integration will happen. A lot of supply chain of Paras Defense will be utilized. And with this, I would say there will be negligible or no capex requirement, even if I have to scale up to all the opportunities that I need.
So you're saying even if you have to do 500 crores, say, from this drone segment, you'll not have to put any incremental money. And, you know, Amit, I'm just trying to clarify out here because we are talking about the subsidiary. But from a stock market perspective, we look at Paras Defense. So the company, so maybe you'll have some support coming in from Paras Defense. But for the entity on the whole, there'll not be any more investment that you'll put in?
It will be very negligible when it comes to, when I'm saying negligible, it will be only infrastructure.
Okay.
That is the building on a space which is already available and already we own it, right? Okay. So there is no expense of any space or any machinery. It's only building which is negligible, I would say.
Yeah, all right. Thanks very much. Great speaking with you. It's a good conversation, and drones are an exciting area. Nigel, are you a drone enthusiast? I was. I mean, I had a few. But
I recall when I was getting married. You know, we tried to get that 8 years ago, and it was something out of the.
There was a drone flying around.
Yeah, there was a drone. We had to pay so much more money, and that too for a very small period of time. But at that time, it was just picking up pace. That's the more fun part of it. But I think there is great potential.
We spoke with the Agriculture Secretary, the Fertilizer Secretary, who said that this nano urea, right? It basically comes in liquid form. And then we had the management of FACT, I think.
Yeah.
It was FACT. They told us that you need drones to spray this stuff, right? Across farms. And if the entire, as the Fertilizer Secretary said, the government's plan is to replace, physical urea to liquid urea into bottles.
Yeah.
I mean, the opportunity, this is just defense. Across agriculture, etc., could also be.
So Paras is going to play in agri, it's going to play in industrial, and it's going to play in defense. And the number that he quoted, 10,000 crores in terms of the Ministry of Defense order pipeline, which is publicly known. And there are only about 10 companies which are competing right now, right? Agri, etc., is still to develop. It's in the works. They're yet to get that certification.
And by the way, we have the first company in that space coming to the market with a cool
Drone
name.
Drone Acharya.
Drone Acharya.
Smaller one.
It's just a cool name. I'm not saying it's a good company, a bad company. I don't know. We've not looked at that in detail. But that's the first pure drone company, I think, which is coming to the market. Deepan is with us. Deepan, anything on drones from you?
Yeah, I mean, my only comment is that it goes at 72 times trading 12 months. So a lot of the positives are being captured, and some of the market is discounting the next few quarters will be exceptionally good. So I prefer to just wait and watch and see how it actually plays out and how the order book also kind of shapes up. Managements are always very optimistic about their outlook, but there are always challenges and execution risks as well. And maybe at these valuations, you just want to wait and watch. I think existing investors can remain invested, but from a fresh investment perspective, I think it appears to be optically a bit expensive.
And it's all future potential, right? As of now, they've not got any revenues from the drone business, and things are only going to take off in FY25. But do stay on, Deepan. We need to get into a very short break. As we do that, here is some important market opinion in a CNBC-TV18 special show, Wizards of Dalal Street. BSC member Ramesh Damani spoke with Sri Datta Bhandwaldar, the head of equities at Canara Robeco Mutual Fund, as he speaks on capitalizing India's growth potential and his sectoral outlook. Listen in.
Good businesses are clearly all the businesses which have those basic traits of capital efficiency and homogeneity or structuralness in earnings, although they also have cycles, but those cycles are far moderate cycles. So it is FMCG, it is largely the entire consumption space. In India, I think even banking is little more structural than cyclical. To the expensive businesses which are structural in nature, their ROE, ROCs are extremely of good nature. So naturally they are expensive. They will always be expensive than the rest of the market. But you have to be careful about their incremental capital efficiency and incremental earnings growth. Clearly, time for India has come. And it would be it is of course reflective in all the parameters that you look at, be it demographics, be it the per capita where we have come, be it the advantages of democratic setup which are in place. I think rarely there are emerging markets where you have such good democratic setup as well as judiciary system. Every year you have 20, 30 opportunities in market. Pick the stocks. So it's a stock pickers market. Yeah, that's where I would encourage people to focus on. Minda Industries, which is now called as Uno Minda, has been one of our best pick. It's almost more than a 10-bagger for us in last 7 years. And why we bought it was the change in facts, both in terms of how the management was actually moving in terms of their business strategies, and more importantly, how initially the promoter decided to actually move all his JVs and businesses which were in promoter group into listed entity at book value, which is very, very rare.
Okay, welcome back. There's 10 minutes to go for the pre-open session. The SGX is indicating about a 71 point cut on the index. Let's get Sudarshan and Mitesh in with some technical setups. Gentlemen, good morning. Great to have both of you here. Sudarshan, Thursday and Friday saw large selling. Yesterday there was a rebound. What's your sense? I mean, we start with about a 50-70 point cut. What after that?
Good morning, Prashant. Well, yesterday my suggestion was to go up and buy at the open if 300 holds, 18,300 held, and yesterday was a good day for traders. Now today markets are expected to be choppy. I do not think we are going into a decline today, but a choppy market really means, as we can see, 70 points down, 70 points up, and then this continues throughout the day. So I do not think there is any trading opportunity for the day. That's unfortunate because yesterday was a good day, but today if you have long positions, you should consider closing them and stepping aside. And the same applies to the Bank Nifty. The Bank Nifty has gone into a very narrow range. It can break out on either side. Since we don't know which side it will break out on, it's best left alone.
Okay, got that, Sudarshan, and good on you. Yesterday you suggested to buy the Nifty, and in fact, someone who listened would have made some good money on that. Mitesh, what's your take on the index itself? I think at higher levels you're expecting some bit of a resistance. What's your strategy on the Nifty?
Good morning, Nigel. Yesterday we suggested not to go long, but to sell at around 18,430, 425 levels. So we did take some positions there. I think the gap down will present an opportunity of adding on to the short positions or just trailing the stop loss and seeing if we can see a further decline. My sense is that unless until 18,450, 470 is captured, the overall tone will be slightly on the negative side. And therefore, I think the idea is to sell on rallies till we see a break beyond 18,470. So keeping that kind of outlook in mind, there's a good chance of us retesting 18,300 or maybe breaking below it. And therefore, I think that's the trade which we have taken. And on the Bank Nifty also, I think the idea is that if we break 43,000, then we'll possibly explore some aggressive shorting. Otherwise, we are waiting it out to sell at higher levels, which is closer to about 43,500, 650.
Okay, all right, Mitesh, you go ahead with your picks.
I have 3 buys to a sell, Nigel. On the buying side is Adani Enterprises. Some very strong price action took place in the last 1 hour in Adani stocks, and Adani Enterprises made a fresh high. That's a buy with a stop at 40.50 for targets of 41.45. Bajaj Finance is a buy with a stop at 66.30 for targets of 6,800, and Hero Motors is a buy as well with a stop below 27.50 for targets of 28.45. On the sell side is Glenmark with a stop at 4.23 for targets of 4.02.
All right, and Sudarshan, what about you? Mitesh has given us his picks. Sudarshan, you?
Well, since I'm expecting a choppy market, the picks are also mixed. Bharti Airtel is a buying opportunity. The stock has outperformed. Buy with a stop under 820. Now, Delta Corp is an intraday short. Short selling should be done only intraday. Stop above 226. Lupin is another intraday short. The stock has now fallen below some significant support levels. Stop above 740. Because it is a pharma stock, please follow the stops carefully. These pharma stocks can do anything, anytime. And finally, ICICI Prudential is a buy. Now, this is a stock that has been in a bear market. So we are really trying to catch a dip or catch the bottom in this. It's not always easy. It's worth trying. buy with a stop under 435.
Correct. All right. Thanks, gentlemen, for the call on the index as well as those picks. We'll come back to you all at around 9:10 a.m. Well, Ashish Chaturmota, Director, Head Research at GM Financial Services, joins in. Hi, Ashish. Good morning. What do you have for us in terms of derivative strategies?
Hi, good morning, Nigel. So yes, I think the broadly market looks like it's going to trade in a range, and the range is between 18,350 on downside to almost 18,700 on upside. This is a broad range. I think markets are going to trade. Structurally, we are in a bull market, so I think broadly dips are going to be looked as a buy on type of kind of opportunity. So I think the overall bias is positive, but I think in the immediate short term, some sideways trend could be seen in the broader market. But if you look at from individual stock picks, I think selective banks are showing very strong trend. So if you look at private sector bank, HDFC Bank and Axis Bank is showing very strong relative strength. So within that, Axis Bank is my top pick. One can initiate a long, keeping 930 as a trading stop loss. On upside, 1000 should be the short-term target in Axis Bank. In the NBFC space, Cholamandalam Finance has seen a very strong recovery in yesterday's trading session, and stock is structurally finding a strong support around 720 zone. So till we don't see a clear breach below 720, it looks like we are headed towards 775 in the shorter term, and eventually stock might cross 820, 830 levels in next couple of weeks. So Cholamandalam is something which we like from short term as well as positional perspective. We like Indigo because there is a strong buildup of positions. Crude has fallen, and if you look at the air traffic passenger has also is going up. So clearly, Indigo is going to be a clear beneficiary, and one can initiate a long, keeping 1980 as a trading stop loss. One can look for 2120, 2150 as immediate short-term target in Indigo. Only sell call which I have is Lal Path left. Stock is consistently trading below its all important averages, and there is a consistent buildup of short positions. So keeping 2320 as a trading stop loss, Lal Path level is a short call. On downside, we are expecting stock to hit somewhere around 2200 zone in next couple of trading sessions.
All right, Ashish, thank you very much. Good speaking with you. Appreciate you joining in with that. Abneesh Roy is Executive Director, Nuvama Institutional Equities. He joins in after a quick break to put focus on the FMCG space. Stay with us.